Hey everybody, Dan Rawich here, University of Options. I'm going to give you our daily trade recap, show you the trades that we took, the results, and I'm going to do a market update. And if you could stick with me for the market update, I think you're going to find it fascinating, just how precise the dark pools have been and how important it's been to keep an eye on dark pools as well as just options flow in general. This stuff matters more now than it has for most of my trading career. And it has to do with this amazing amount of options traders that are coming into the market. And now the SPY and the NASDAQ expire every day. And they're very inexpensive to trade these daily contracts. So you have this massive amount of traders coming in, trading what we call 0 days till expiration. And no offense to anybody, a lot of them don't know what they're doing, so they're extremely easy to trade against. And we're really seeing this in our results. So yesterday, 91%. Over the last 7 days, 91% win rate, 62 wins, 6 losses. And again, we track every single trade. This is the last 30 days. This is the trading ledger. You guys can have this link. Anybody that wants it, you can, look at this and really see what's going on. These are real results. These are not back tests. These are not theoretical pro forma. These are real results. Now, if you want to talk about theoretical, I think it's really interesting because I'm constantly back testing everything that we do. Every little tweak to the system over time has been back tested, usually 1 to 200 trades. But what I wanted to show you real fast is going back to this March of 23. That's not that long ago, not long ago at all. Let me move my face out of my way. And you can see that was an 83% win rate, so not bad. 82% prior to that, 78% on this particular test we did. But now we are running at 95%. Now that's back test, and that's a slight adjustment that I've made to the system since these results that you just saw. This is new. This is theoretical. But as you can see, my theoretical results match our actual results almost perfectly. So real quick, let's go through the trades. I think you'll find that interesting. And did I mark them all off? Oh, I know. Sorry. And I'm perpetually losing my voice. So, okay. So the first trade, and again, these match up very well to the trade log. The first trade I took personally was at 9:09 this morning. Again, Lee kind of handles a 6:30 to kind of 7:30. I come in, we do a duet from 7:30 to 8ish, and then I take the 8 to 9:30 or 10 o'clock session. So the first trade came right here. You can see that we had the bear signal. Remember, what needs to happen is when you get the signal, you need to clear the dot. In some cases, the dot is above when the signal triggered. And when that happens, you need to clear the highest wick. In this particular case, the highest wick was the actual signal candle. So it kind of triggered here. We did not go in. I can't tell you why. It backed up a little bit, and then we went in on this candle. Probably should have gone in on this one just because you can see the massive drop in chop. But it's sometimes hard to go back and second guess, like what kept me out. For some reason, I wanted confirmation. Didn't matter. We were in here for 1 minute and made some money. The next one was a pretty good sized loss. Lee also had a pretty good sized loss earlier in the morning. And when we get these losses, we have to really look and see, what did we do? Did we follow the rules of our system? Because sometimes you're going to lose. And you just have to make sure that you didn't break any rules. If you follow the rules on your entry, follow your rules on your exit, and you lose on the trade, you should pat yourself on the back because you executed flawlessly. We can't control what happens after we go in. And I myself sometimes beat myself up. But when I go back and recap these trades, I realize I got out a little too early of this one. I did get a little FOMO. I remember the feeling. I entered on this candle. But look, the chop index dropped again. We already had a real live signal. We had just broken through this new level right here. So, in many ways, it was about as perfect as you can get in terms of an entry. But it turned, the market reversed almost right after I entered. One or two candles later, we got the exit signal. This is where I can't say I flawlessly executed. Should have gotten out on this pink exit. I waited one more candle in hopes and ended up taking a slightly bigger loss. This, to put things in perspective, this was $8 per contract. So if I'm trading for 40 contracts, this was a $320 win. This was a $16 loss. So turned right around and gave back the profit and then lost the same amount. So I was frustrated, but not defeated. Then at 9:35, this signal was so good. Fresh bear signal. Remember, you got to clear the dots or the wicks. So no dots. So we just have to clear these wicks right here. And you can see the candle that broke through. You can see what happened to the chop index. And this is about as perfect as it gets. I could have stayed in a little longer, but this was a really big gain. This, as I recall, was 20, maybe $21, maybe 19, somewhere between 19 and $21 per contract. So call that an $800 trade. So now I'm back up nicely for the day. Then I taught some classes because we teach classes on Tuesdays and Thursdays. And we went back into our live trading session at 11 a.m. And this trade came along at 11:13. Again, bear signal triggered. What do we got to do? We got to clear the dot. Here's your dot. That validates your entry. That's your entry candle. Did the chop drop? It sure did. Boom, boom. One candle, in, out, nice profit. Then I wanted to get back in because you could tell it was still really kind of falling apart. And there was another reason. It had to do with the dark pulls, but we'll talk about that later. So I needed to find a re-entry. And for me, once I see three or four candles settle into one place, it's kind of built a little base. I'm looking for a break below that base. And it came perfectly on this candle as the chop dropped and got out in one candle again and did pretty well. Then I jumped right back in. Don't usually jump in this fast, but again, the momentum was all really, really bearish here. So we picked up another few bucks on that trade. And I think that was it because then I had to go into meetings and all that stuff. So pretty darn good day all in all. I don't think I recapped it for you. So real quick, I think Lee went 7-1 and I went 6-1, something like that. Oh, I have it here. Sorry. Yeah. So that's not today. Yes, it is. No, it's not. Sorry. I don't know where I pasted today. I think he went 6-1. I went 5-1. Somehow I think I got these out of order. I don't know what I did. Sorry. But again, you could see that it was a really good day. Okay, now let's do a market update. I think this is going to be pretty interesting for you. I want to begin with the dark pool activity because I commented on it this morning. I drew it on the chart and it just really came in to be like really important. So this dark pool that came in at 4:30 this afternoon, it matched an incredible amount of dark pulls. They just kept coming and coming and coming at 418.72. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 200. So I'll call that 11, 12, 13. It's over $2 billion of dark pool. Now, for those of you that don't know, dark pools are trades that are done by big money, and this is legal. They're able to, when the trade is big enough, I don't know that it has to be a certain size, but they're able to make the trade and settle it in Europe, and we don't see it till the next day. Why? Well, because if they came in during market hours and tried to buy $100 million or sell 100 million of SPY, guys like me would smell it so fast over here with options flow, we would attack. They would never get their position built before we came in and either ran it up or ran it down. Okay, so I'm going to show you what that looks like. Also, again, a little more bullish here. You can see the top calls here were the top trades here were calls, but still overwhelmingly amount of puts, still very bearish look. And again, you can see the trend here. Red is bad. Red are puts, green are calls. So you can see how that's trending. And then I'm going to show you that dark pool. That was 417.72, if you recall. And the market opened right. Is today Wednesday? No, Tuesday. No, today's Tuesday. Market opened right here. The first thing it did was it tested this dark pool area. And we knew about these dark pool areas from yesterday. And then they just kept coming and coming and coming. And so I knew that if it broke loose from here, that all hell was going to break loose. And it did. So that gave us a lot of confidence in continuing to attack our short positions. The next dark pools that came in later in the day started coming in at 414.02. And they has hit over and over and over again, a couple billion or more at 414. Now that's a big spread between the DPs. So if you look here, this is that dark pool level. Guess where the market held? Right here, right on the dark pool levels. And by the way, those same levels showed up last week. All right, so that's the dark pool story. Where does this leave us? This leaves us with tomorrow. If the market falls below 414, all hell will break loose, and you're going to want to be short. Another thing, a phenomenon that I keep talking about, is this 41.45 level on the S&P. I'm going to go to the date chart real quick. Sorry, this is getting to be a long video. 41.50 has literally been treacherous. Every single time we get around it, something bad happens. It actually looked like we were clear of it over the last couple of days, but we had another challenge right above it, and that was 4,200. And I said, if we can't get above 42, we would come back down and test 41.50. I didn't expect it to happen same day. And so now you can see we're in a very vulnerable spot here, giving up this level, and you saw those dark pools. So that's that. Okay, then I wanted to show you. Oops, we looked at that one already. So now we're going to look at dealer hedging and overall options flow. So this line, it's called algo flow, and what it really is, it's accumulation of all the options that are flowing. And you can see the day started kind of green. By the way, I put the dark pool. Looks like I lost it. Let me put him here.